Hey gang, Manji here at FX Link. Thank you for joining us on this week's Sunday's market preview video. In this week's video, I wanted us to talk about the importance of forming a trading plan or following your trading plan, and mainly focusing on what to have before taking a trade, because there's a difference between treating your trading as a business and treating your trading as entertainment. Because traders who treat their trading as a business mainly look to follow their trading systematically. If you have the passion for trading, it would be a enjoyable yet boring process that you take each and every time. During my process of talking to many traders throughout my few years of trading, I realized that many traders have so much information on how to trade the markets, and they have various techniques which they haven't written down, or worse, they have a plan they haven't tested to prove to themselves that the trading system which they are trading live, or which they are planning to trade, is profitable over time. They don't really know whether the system they have makes them or loses them money, which is a bad thing. Or more importantly, even if they did know that if they followed the rules in their trading plan, they will be consistently profitable. Most people don't follow their rules. And if people spend much more time on the psychological part of it rather than the systematic part of it, I think they will do better. Because many people mostly look for trading systems, and it's not bad. It's not bad to look for a trading system. In fact, it's important to be looking out for a strategy that will give you positive expectancy on the long run. So that is why here at FX Link we try to give out training, educational information, strategies and systems on a weekly basis on our YouTube channel. During your trading plan, you have to go through a process, like I said before, a process each and every time consistently in the market in order for you to consistently bring in profits. Now, before taking a trade, you have to identify two things that are crucial in your trading process. First process is a process of forming an opinion of what the market is most likely to do next. And another thing is waiting for the opportunity and reacting accordingly when the opportunity arises in order for you to be engaged in the market. Now, first of all, I like to look at the daily time frame, looking at what the market is doing. Now, in order for me to form an opinion about what the market is most likely to do next, I need to process the information of what the market has done, which is a process of reading the charts, as we are about to do now. As you see on my chart, I'm looking at the USD Swiss franc pair, and what I see here is mainly the market has done something interesting, which is as the market went down, okay, kept on making a down slope, ebbing and flowing. I came right, ebbing and flowing right here, making a lower low, lower close. It began to make a bullish reversal as soon as we had a higher high, higher close right here. Okay, after having this higher high, higher close, okay, we had a retracement back at previous resistance levels, and then we have another higher high, higher close. Okay, now mainly as we keep on having higher high, a series of higher high, higher close, I am positioning myself for a trend continuation trade on the upside. So I will be looking to go bullish rather than bearish, because the market is telling me that it is more than likely to go bullish rather than bearish in the next few days or few weeks to come. Okay, now that we have a higher high, okay, higher high right here, our initial kill zone came between our previous resistance levels right here and our previous support right here. And as the market is currently in between right here, I'm currently interested at this particular support level right here in order for me to have a counter trend trading opportunity on the lower time frames. Okay, now getting to the lower time frame, I want to analyze how the market is most likely to go, where I anticipated the move. And as we anticipated a bullish move, price as soon as the market opens on Monday, it can go off and resist and retest these highs over right here. Okay, or price could come to our support levels, retrace a little bit to our support levels, and then after retracing a little bit to our support levels, then retest these highs. Okay, now as I take my Fibonacci tool, which is a tool on my trading arsenal that I use in order for me to pinpoint high probability trades on a consistent basis throughout the market, I would take it from this low right here, put it on to this high right here, and as you see, we have a 32 retracement over to these levels of structure. Okay, let's take another retracement from this swing low right here to this swing high over right here, and you will see we have a confluence of a 618 retracement and a 32 retracement right at that exact very same level, which is at 94.25. Let's go to my trading time frame. Okay, and look at another tool that I'm using consistently in the market, which is a Fibonacci Extension tool. I would take my Fibonacci Extension tool from this swing high back to this swing low, from this impulse leg right here back to this high right here, and you would notice I have a 127 extension aligning with our 618 retracement and our 32 retracement that we had on our higher time frame analysis. Okay, and we have an ABCD pattern coming off this leg right here. Excuse me, guys. Yeah, right. All right. Again, we have a ABCD pattern, if I'm not mistaken. Let me clone this. Take that very same leg, put it to another leg. You would notice that I have an ABCD pattern terminating at that very same level where we have a Fibonacci confluence. And if I would take another Fibonacci extension from that swing high, okay, to this swing low, you would notice I get a 1414. Excuse me, guys. I get a 1414 aligning with that 127 extension with that Fibonacci confluence that we had on our higher time frame analysis. So we have, as you would notice now, we have a pretty good confluence aligning at 92.25 levels, and knowing that we have a previous structure level right here. Okay, this level, I will be waiting for an opportunity for price to come over to these levels right there. Okay, so I'll be waiting for price to do this. I'll be waiting for price to extend over to these levels of structure, and I'll be looking at another filter that which is my RSI indicator, and I'll be looking for an oversold state. Excuse me, guys. I'll be looking for an oversold state to be met, and then for my entry reason, my entry technique, if the opportunity arises, I'll be looking for a potential double bottom for price to do something like this. I'll be looking for a retest of this low right here with a potential bullish divergence on my RSI indicator, and I'll enter next bar market with a risk to reward that looks something like this. As we know, we have a lows right here, so we will be having a pretty low risk, high reward trade. So if I would enter right here, I would have a risk to reward of roughly about 30 pips of risk on this one, and a 58 to 60 pip reward on this one, which would be my first targets. Let me take these off, like a clean chart. Okay, we would have a risk to reward that looks something like this. Let me take my Fibonacci retracement tool from that swing high back to this entry level. Okay, put my 32 retracement back in. You would notice my 32 retracement comes over right here, and I default that from that structure level. Okay, and our 618 retracement comes over right here. So if price would give us an opportunity of coming over to these levels and meeting our setup, then we stand to have a potential reward of 88 pips, okay, and a risk of 30 pips, which is a risk to reward of 1:2.8 in this trade.